Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Tim Stanovic along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Denitsa Sakova. Denitsa, I think you're looking at some of these companies that reported.
Meta Platforms still down 11% today. But the more interesting story to me is what's happening in the corporate bond market. So the ticker, of course, is META. The stock tumbled as much as 14% in earlier trading. Of course, it comes after Mark Zuckerberg warned that the company will need to spend even more aggressively on AI, which is not the first time he does this. So perhaps that is not as surprising. But what we're seeing in the bond market is really impressive. Meta Platforms said they're planning to sell 30 billion of investment-grade bonds. And the demand we're seeing there from investors, it's absolutely unprecedented. 125 billion of orders for Meta bonds, surpassing the biggest deal before that, which was for CVS in 2018. So really big demand there. Very different reaction in the stock. We're definitely not seeing that insatiable demand at the moment. Revenue for the company rose this year. We saw ad revenue doing well. So fundamentals clearly are doing well, but we saw a lot of downgrades today. One of them was Oppenheimer. It downgraded to perform from outperform, saying investors will struggle to rationalize the PE. And then Benchmark downgraded to hold from buy, saying the company will be range bound. After the big drop today, the company is up only 14%. And we remember like just a few weeks back, we were talking about kind of relentless rally, and we can see one day of turmoil, how much of the heat it takes off.
Just one day, though. So we have to wait, or one quarter, I guess. I mean, I guess we have to wait and see, right?
Yeah.
Like what it all means. As I think about the conversation we had with Mark Mahaney.
Yeah, if you missed that conversation, check it out on our podcast feed. He's been covering these companies for years. And there are some idiosyncrasies with Meta's spending that you brought up.
Yeah. That
don't make investors look at it the same way as other companies that are making those investments that can then sell that capacity.
But he basically talked about how they're monetizing it in terms of ads, right?
He's sticking by his buy, right?
He definitely has outperformed. He's got on that company. Hey, let's get to one that's having a tough time in today's session. Shares of Chipotle.
Chipotle is having a really bad day. To be precise, on intraday basis, it's the worst day since 2012. The ticker is CMG. Shares plummeted after the chain cut its outlook for a third time this year. And we're worried about young diners. They pulled back from eating out. And obviously there has been a lot of concern about consumer spending, and this is adding up. It's not only Chipotle. We're seeing similar sign from Shake Shack. In the third quarter for Chipotle, comparable store sales rose slightly, but fell short of what Wall Street was expecting. Chipotle shares fell as much as 22% in earlier trading. We actually saw some dip in Kava and Sweet Green, so definitely the industry is reacting to this. The company saw a broad pullback in visit frequency. About 40% of the company customers come from households that make less than $100,000, and we're seeing a pullback there, and that's very worrisome for the economy. And for young people, no longer eating Chipotle, I guess.
I will tell you, this is totally anecdotal.
Yeah,
and I never got to lunch because of our schedule here. But yesterday we had Fed Day, so I had some time to go.
Because we're not allowed to eat
some
lunch.
No, we're allowed to eat lunch. I bring it usually. So I treated myself to one of these fast casual places. Yes, I went a little later than the lunch rush.
Yeah.
There was only one other person in there.
Oh.
And I was like, this is not good. Usually there are long lines at these places.
So is it a company story? Is it something more broadly in the economy?
It wasn't a Chipotle.
I feel as though there is definitely a little bit more of a trend. That's quite a few companies are doing well. We're seeing Chipotle and Shake Shack, some of those are being hit. Also, people are eating healthier. Maybe that's part of it. Everyone's talking about
that. I thought Chipotle was kind of healthy, to be honest.
Maybe compared to Kava and Sweet Green, they're maybe a little bit healthier. Not that they're doing well. They're also falling on the news.
Kava's kind of similar-ish.
Yeah. I think it's a little bit healthier.
Skip the tortilla, right?
Yeah.
Don't get the chips.
Yes, no chips.
What's the point?
Use salad as a base. It depends. You can make it your own.
20 seconds on Comcast.
Comcast, pretty bad day. It actually was up initially after the earnings result, but it lost 100,000 subscribers. This is the 10th quarter when they see a loss in subscribers. It was actually less than what analysts expected. The revenue also beat estimates. But that said, it's just been a business that's been struggling for a very long time, down 30% year to date. And it's just pretty much a story of losing competition to streaming and internet providers.
Ticker is CMCSA for those interested.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.